Welcome to the Power Options tutorial for the Covered Call Quick Find tool. There are many investors in the market today who are still of the buy and hold mentality. They are holding on to shares of stock, hoping those shares will rise in order to realize a profit. Every day we hear these types of investors ask, "Why would I sell a call against my shares and agree to give up my stock at a set price?" Well, if you can forgive us a slight breach of etiquette, we tend to answer that question with another question. Do you know how much money you are leaving on the table? If you are holding shares of stock in your portfolio and you are not trading covered calls against them, you are essentially leaving money on the table. The Power Options Covered Call Quick Find tool will allow you to quickly see how much money is sitting on the table that you are not currently taking advantage of. The Quick Find tool will help you compare the risk-reward value for different strikes and evaluate those positions whether you're slightly bullish, slightly bearish, or slightly neutral in the current market situation. To access the Power Options Covered Call Quick Find tool, simply direct your browser to www.poweropt.com. If you are currently not a subscriber or do not have a 14-day free trial, simply enter in your first and last name and your email address in the spaces provided, and then click the Start My Trial button. We will promptly send you an email with the user ID and password so you can start using the Power Options suite of tools. If you already have a current subscription or you are on a 14-day free trial, simply click the client login link on the main home page and then enter in your user ID and password to access your Power Options account. Once we have logged on to our account, we will click the Covered Call Strategy tab on the main tab menu feature. From the Covered Call tab, we will access the Quick Find tool by either selecting the link in the submenu or selecting Quick Find from the available tools in the Covered Call Tools section. Once we have accessed the Quick Find tool, we'll be prompted to enter in our stock symbol, the number of shares we are currently holding, and our initial stock sentiment, whether we are neutral, slightly bullish, or slightly bearish in the current market. For this example, let's say that I own shares of Hewlett-Packard. If for whatever reason you do not have access to the stock symbol, simply click the Lookup Symbol link next to the Enter a Stock Symbol field, and you'll be able to search for the stock symbol by entering keywords of the company name and searching all optionable stocks to find your symbol. Once I've entered my symbol, I will now enter the number of shares that I am holding. For this example, we will assume that I own 1,000 shares of Hewlett-Packard. Now I can enter my initial stock sentiment. Whether I'm neutral, slightly bullish, or slightly bearish, I'll simply select my sentiment. For this example, we'll stay with neutral, and then I will click the Submit button. The Power Options Quick Find tool will now show me the potential calls I could sell against my 1,000 shares of Hewlett-Packard, and it will show me the current money on the table that is sitting out there waiting to be claimed that I might not be taking advantage of, and it will also show me my potential profit I could make on the position by selling that call, and how much protection I will receive by selling this call against my shares of stock. Although I selected a neutral sentiment for my shares of Hewlett-Packard, if I was neutral but slightly bullish, the Power Options Quick Find tool is showing me that I can currently generate $600 of income right now by trading a covered call. I could sell 10 contracts of the December 52.5 strike option against my 1,000 shares of Hewlett-Packard. Remember, one option contract typically represents 100 shares of stock. Since I own 1,000 shares, I could sell 10 contracts of the December 52.5 call. Even though I generated, or I could generate, $600 of income right now by selling the 52.5 strike call, if the stock rose and went above $52.5 in the next 20 to 30 days by December expiration, I could realize a profit of $2,370. This profit includes the initial premium I received by selling my 10 contracts and the appreciation I made from the current stock price to the 52.5 strike price that I sold. In addition to generating $600 of income and having a potential profit of $2,370, by selling this call against my shares of stock, I could also generate a 1.2% downside protection. This means that within the next 20 to 30 days, my shares of Hewlett-Packard could drop 1.2%, and I would still be at my general cost basis for my stock. If I was very neutral on Hewlett-Packard, and I did not expect the stock to move that much within the next 20 to 30 days, I'm shown that I could sell the December 50 call and generate an income of $1,700 right now. Again, if I do nothing and I simply hold my shares of stock, I am leaving $1,700 on the table. If the stock stays above $50, I would generate a profit of $970. The stock was trading above $50 on the third Friday of December, the December expiration date. My shares would be called away from me. The premium that I received, minus the difference of the current stock price to the 50 strike call, would give me the profit of $970. This potential call would also give me 3.4% of downside protection. This means that by selling the December 50 call, not only would I generate $1,700 of income right now, but I would also be protected if the stock dropped as much as 3.4% within the next 20 to 30 days. If my market sentiment was slightly shaky, and I was afraid that my shares of Hewlett-Packard might decline over the next 20 to 30 days, I could sell the in-the-money 47.5 strike call and generate $3,500 worth of income right now. However, since I am agreeing to give up my shares of stock at a price that is slightly lower than the current trading price, if the stock remained above $47.5 at December expiration, I would generate a profit of $270. However, I would receive a very high downside protection by selling this call. If we sold the December 47.5 call, we would receive a 6.9% downside protection. This means that my shares of Hewlett-Packard could drop almost 7% within the next 20 or 30 days before I would technically be losing money on the position. Now let's say that I am slightly bullish over the next 20 to 30 days. I feel that Hewlett-Packard might rise significantly in that time frame. Instead of using a neutral initial stock sentiment, I'll simply click the drop-down menu and click on Bullish. I'll then click the Submit button to see what opportunities and how much money is out there sitting on the table waiting for me to claim if I was more bullish on Hewlett-Packard. Here, I see that I could generate a smaller monetary income right now of $150 if I sold the further out of the money 55 strike call. If my shares of Hewlett-Packard did rise above $55 within the next 20 to 30 days, I would realize a very high profit of $4,420. Now, because the premium is slightly smaller and the income that I generated was lower, this would only give us a downside protection of 0.3%. Still, this protection of 0.3%, the $150 of income I generated right now, is much more than I would receive than if I just held the shares of stock, did not sell a call against it, and turned my shares of stock into a covered call trade. Without selling a covered call against my shares of stock, I am leaving money on the table every day that I can take advantage of. Whenever you have a question about how much money you are leaving on the table for shares of stock that you own, simply log on to your Power Options account, click on the Covered Call Strategy tab, and then click on the Quick Find tool, and you'll see how much money is waiting on the table for you. Remember, if you have any questions at any time regarding the tools available on Power Options or option strategies in general, you can access the various education and learning tools in the main Home tab. You can also access various help tools and tip sheets in the strategies themselves, or you can feel free to give us a call at our toll-free number 877-992-7971 or 302-992-7971 if you reside outside of the continental United States. You can also send us an email at any time to support@poweropt.com. That's poweropt.com, and one of our staff members will answer you as quickly as possible. Thank you again for viewing our webinar on the Power Options Covered Call Quick Find tool. And remember, if you are just holding shares of stock and are of the buy and hold mentality, you are leaving money on the table, and the tools on Power Options will help you evaluate just how much money is out there waiting for you, as well as analyzing how much extra protection you could receive by turning your long stock positions into a covered call trade.